just happened to Ollie's Bargain Outlet Holdings stock. Here's an off-price retail chain with a stellar long-term track record. Even as the rest of retail folded, Ollie's stocks seem to be unstoppable because consumers, well, they can't resist a good deal. These guys can beat Amazon on price, which is why the company can keep expanding at a time when so many other brick-and-mortar merchants are retrenching. This stock has more than doubled since I started recommending it 2 years ago. It's up a quick 13% since the last time we spoke to the CEO in December. However, Ollie's reported last night it was dinged for $1, a buck 65, 1.65%, and was down much more during the intraday part of the session. The reason, even though the company delivered a nice 2-cent earnings beat off a 49-cent basis, with better than expected revenue up nearly 26% year over year, stronger than anticipated same-store sales up 4.4%. Management's full-year revenue guidance came in below some firms' expectations. Same-store sale forecast was considered light by some. So is this viable pullback, or should we be concerned about the guidance? Let's check in with Mark Butler. He's the chairman and CEO of Ollie's Bargain Outlet Holdings. Learn more about the quarter, where his company's headed. Mr. Butler, welcome back to Mad Money. Good to see you, sir.
Hi, Jim.
Have a seat.
Great to see you.
All right, well, Mark, I've been following the company since it came public, and as you said, when it came public, you thought you could do a 1% to 2% comp, mid-teen story growth. You've done consistently better than that, but you've been sticking by the mantra, and then today someone decides that's not enough. Bank of America Merrill. You're ahead of plan on every metric.
You know what, Jim? Since we went public in July of 15, every single metric that we have set forth, every piece of guidance, we have either met or exceeded. Right. We have beaten every single one. I always said we were a 1% to 2% comp story.
Right.
That was it, no more. And we've asked everybody, and the analysts that have been with us from the beginning, they understand it. They get it. We're a 1% to 2%. We gave that guidance again. We're coming off of our biggest, our best, our brightest year ever. I couldn't be happier with the business.
Well, you're the strongest retailer I follow, so that makes sense. Now, one of the things that I thought was interesting was that you say closeout deals are at a historical peak. Let's not forget Toys R Us. Is this as good as you've ever seen it?
Absolutely. I've been doing this for nearly 36 years. It just simply has never been better. As we mentioned, and I've been fortunate to be with you several times, since we've gone public, I think that the buying environment has helped because more people know about us. They see us on TV. They see us talking. They hear us at investor conferences. More and more manufacturers have gotten to know us. Therefore, they're calling us with their deals, with whatever they want to liquidate.
Okay, so the president's been on record. He's been attacking Amazon. Maybe that's because Jeff Bezos, maybe got a bad Prime delivery. I don't know. But the one thing that is clear is that he's saying that retailers have been wiped out by Amazon. You're under Amazon on most of the prices you sell.
Absolutely, and perhaps even more importantly, underneath what we call the marts.
Right.
So that's really what we attempt to do. Right. But brick and mortar, this is how we make a living. It's never been better for us. Not ever been better for
Ollie's
us.
Army, how they doing?
Oh, nearly 9 million members.
It was like 7 million when I saw you last.
Yeah, it's growing faster than our store pace. And what we're going to do is we're going to introduce ranks this year. So hopefully you'll earn to be a 3-star general in the Army.
Well, there are good. But 3-star general, what kind of discount do I get?
You're going to get an additional offer. You're going to get special offers. I think it's going to really resonate to these bargainauts.
One of the things I think people don't understand. Almost every retailer is everywhere. There's no growth in. Look, I love Home Depot, but they don't put up any new stores.
Right.
How much room do you have in this country to put up more stores?
We think we can grow upwards of 950 stores. I'm in 22 states with 274 stores now. That's a pretty good poke from now. So there is no reason why anybody should be less excited about Ollie's today than they were yesterday.
So give me an example. Like, are you in Texas? How many do you have?
We don't have any in Texas yet. We'll likely be looking at our next distribution center somewhere near Texas.
Okay.
And that will open up the door for Texas.
Now, I am trying to get people to understand that even though the economy's better, the consumer got used to bargains. They really didn't graduate to more expensive stuff this time. Is that just a new frugality and you're a beneficiary?
Well, I think so. And I think that it started perhaps in 2007, 2008,
right.
2009, when we had what we called the trade-down effect, where people really needed to save money, and they liked it. And then they gave us a shot. They liked what happened when they came in. We said thanks, and they keep coming back. Our business just simply has never been stronger.
In terms of planting a flag, this Toys R Us bankruptcy's got to be one of your best, right? I mean, you're open for business with that inventory.
Jim, I think this is the perfect storm for us. I think twofold. Number one, there's going to be a lot of product that's going to be available because these manufacturers are losing one of their number one, if not their number one customer. The second thing is that toy retailer sold a lot of toys brick and mortar. Hopefully, a lot of them, or many of them, or some of them, are going to come to Ollie's and buy toy closeouts. I think it's a perfect storm. I think it's a win-win on both sides of the equation for us.
Last thing, we had a real estate investment trust on tonight. There's no doubt about it. There are some strong stores, and there's experiential economy. But the bankruptcies continue.
Yeah.
They have not abated. And when I see a bankruptcy, do I think good for Ollie's?
Yeah, I think so. It usually takes a little bit of time for the pain to set in until I become attractive on the leasing side. Because we don't pay much, much like we get our goods.
Right.
We're tough on our leases. But we pay, we revitalize shopping centers, we bring a lot of customers, and that's why our parking lots are packed, our stores are rocking.
And that's why the payback is 2 years.
Yeah,
pretty amazing.
Really good. New store performance is off the charts.
Well, people got an intraday chance. I don't know if they're going to get another. That was such a great opportunity. I wish I had a show at 12 o'clock. That's Mark Butler, the chairman and CEO of Ollie's Bargain Outlet Holdings. This has been the best retail story we've covered, and I think it's just gotten better. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.